Hey folks, it's your rich uncle here. Today we're going to be going through this interesting graph, and I'm going to be talking about some tips on different points along your life cycle here, whether you're early in your 20s, just getting started, figuring out do you want to go to college, or figuring out if you want to stay in your job if you're already in your mid-career point. Stay tuned and we'll dive into the numbers here. I saw this graph here the other day and I wanted to kind of go over it with you folks and add some commentary. Just a little bit backstory of myself. I went to college, got a master's degree, bachelor's of engineering, so 2 degrees. So I could probably say I'm a product of the system, and still I'm not a huge fan of college. I think college is for most people out there because it helps you kind of drop into the system. And just kind of taking a look at this graph here, the numbers are very averaged out, right? Like it's, you're looking at the degrees. A lot of people in our group, they make a lot more. Obviously, you're throwing in a lot of the poli-sci, the communications, and the Asian East Studies majors into the college earnings with college degree data, which is the blue line here. And, there's obviously a huge range of earnings without college degrees in the orange. But what I wanted to kind of model out, and it's just important for viewers here, is when we're trying to ascend to financial freedom, the key is making as much money as possible so that you can pay your expenses, but then the key is always the net, right? So inherently, the more money you make, the more kind of gap you have to be able to save more money to be put into investments. And the blueprint is essentially take as much money as you can and to put it to investments. And that will, if you're doing maybe $30,000-$50,000 a year of net savings going to investments, you can typically get yourself out of the rat race in 5 to 10 years pretty easily, in my opinion. That is, of course, you're getting away from all the Wall Street mutual fund garbage, and you're kind of getting into the world that we kind of teach you guys, which is paying less taxes, the taxes with passive income, and then getting into some of the other wealth building tactics such as infinite banking, which you guys could check out in other videos that we've done in the past. But here's my point, folks. You're taking a look at this graph. What all it is you're taking the area under the curve here. Is you can get there delivering mail or folding sandwiches at Subway, which is another job I've personally done in the past, but it's going to take you a lot more time to accumulate this value under the curve. Or going to college, you can extend you up higher, so you can probably get the same area under the curve a lot quicker, maybe in half a decade quicker than the orange curve. But the important thing here is where we lose most of you guys is people will just spend this money or go put it to buy a house to live in, which I don't think is necessarily a good idea for young folks, and they won't put it to investments. So to me, it's not really about whether you have a college degree making a little bit more or you don't. It's more about what did you do with the damn money? Did you go and spend it, or did you put it to investments? But nevertheless, I think what college degrees do is they allow people to kind of step into a little bit less competitive work environment. A lot of people have college degrees, of course, very competitive, but I would argue that if you don't have a college degree, man, it's a dog-eat-dog world out there. I mean, you're just kind of amongst all these applications of kind of lower jobs that are being paid $12 to $16, $25 an hour. Where if you don't have a college degree, you just don't have access to those higher end salaries, or at least to get into the door of a higher end career track. Of course, everybody does that. There's a lot of people out there saying, spouting that you want to be an entrepreneur so you can work for yourself. But if you go on LinkedIn right now, you type in entrepreneur and you see who comes up with the first 20 people, go and click on them. What you'll find is typically people who entrepreneur or CEO in their title, they're typically broke. They're like a CEO of one person company or entrepreneur of one, a solopreneur, and they're broke. And when I'm looking for folks to bring into my company and my team, and when I see that, it's typically somebody who couldn't hold on to a job. And then I start to dig, right? Like, do they have a college degree? Are they kind of building up from something to nothing, or are they kind of building up from a job and kind of building their skill sets? And that's cool, right? But most folks that are kind of starting on that path, they just weren't able to get their foot in the door with a big company. And in my opinion, it's good to kind of work for big companies, because that's where you learn a lot of, you know, best practices, leadership, learn how companies actually do things and build systems. My first several years working, I worked for a big Fortune 50 company. I didn't like working for them, but then again, I look back and like that's where I kind of learned how to manage people, and that's where I learned how all their systems kind of worked. And I can today pick and choose certain things. So a lot of those things were very bureaucratic and were a pain in the butt at the time, but now I see the reason why. When you have people working for you and kind of following SOPs, standard operating procedures for you, that type of bureaucratic system is what drives kind of the same repeatable results again and again and again to execute projects. But getting back to the graph here, my big takeaway is just kind of looking at the area under the curve, and the key is taking that money and investing with it. Now, I know some of you guys are thinking, because a lot of you YouTubers out there that listen and watch a whole bunch of stuff are typically more on the entrepreneur side. You can get big if you wanted to, right? If you grow your mind, you have the great mindset, blah, 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 blah. But more than likely ain't gonna happen for you, right? Like, I mean, being an entrepreneur, not going down the college track is very difficult, and not a lot of people can make it. Whereas I think most people that go down the college track, I would argue that it's the majority are somewhat successful. What I mean successful is they make about $60,000 plus a year, if you call that being successful or not. But whereas if you go down the orange path here and you start to go on the entrepreneur and make it on your own, or just work your little semi-minimum, lower minimum wage type of salary track, it's likely not to really happen for you. So that's where the reason why I like college, right? Like if I had kids that weren't that smart, kind of dumb kids, I would probably put them to college, because that effectively gets them into a track, or at least gets them into a range of possibilities, where the worst possibility is they just go find a dead-end cubicle job making $50,000, $60,000 a year. Not bad, right? In the whole grand scheme of things, that's a pretty decent life for somebody who lacked the higher end skill sets that, you know, I think you need to ultimately have to be successful to become a higher net worth person. Whereas, you know, you can have a very intelligent person, high EQ, high IQ, however you want to call it, who's taken this orange track and not gone to college. And a lot of times, unless you have an element of luck, being around the right people, being in the right things, choosing what to focus on to go down the right path, it likely will not happen for you. And I think that's why, why people continually to send their kids to college. And even smart entrepreneurs send their kids to college so they can get them outside of that very asymmetric risk path in terms of, you know, being an entrepreneur, and getting them into the more of the kind of the semi-sure thing. Of course, we downplay a lot the use of college educations and traditional career paths, because we're all about, you know, getting into financial freedom and kind of taking that job and shoving it, right? But make something very clear from Rich Uncle's perspective here. That job for me was very important to make a higher salary, so that I had that gap in my expenses to be able to put to investments. If I didn't have that engineering job, I wouldn't have been able to save $50,000, $100,000 a year plus to be able to put to rental properties. And without that capital, the capital is the most important things. We have other videos where I kind of talk about how to save that capital and maximize that. But, you know, if you've got a good paying job, milk it, right? But be smart about it. Don't be like one of these guys who make $120,000 and have really nothing to show for it at the end of the year. That's what the system wants you to do. The system wants you to continue to churn. So you're continuing on this path to age 45, 48, 57, and you're that sucker to the end. And that's another part of this graph that I actually think is very true, right? As you see at age 51, the salaries for all these people start to drop off. And why is that? Well, one could argue that your skill sets are becoming obsolete. You know, I know a lot of our clients that are computer programmers, those types of people, pilots, you know, there's definitely diminishing skill sets right there. Whereas, you know, civil engineers, you know, concretes and structures aren't really changing that much. And you can start to parlay into from a more technical path to a management track if that's what you want. You know, dealing with people is difficult though. But, you know, there's a finite portion to your career path. It's not as bad as the not for long NFL football path or being a professional athlete, but we all have a shelf life here. What can you do in the years where you maximize that? Most people that become financially free in our group, right, like at the time you hit your mid-30s and you're expected to take those first, you know, middle management roles is about the time where you start to become financially free. Myself and a lot of my partners, we quit our jobs right around our early 30s to at the latest mid-30s. And that's about the time where you're expected in your career to kind of transition to those management roles into more responsibilities. And you guys heard me say the saying, right? 10% more pay for 50% more BS, right? It just doesn't make sense. But that's, you know, I think that's what this graph here shows, right? Around 45 to 51 is kind of your peak earning years. The whole goal of this is to get the heck out before that time. Now, a lot of the clients, they've kind of come to us in their mid 40s with a $1 to $1.5 million net worth. And it's not too late at that point, right? You're just a little bit late to the game and it's fine, right? Everybody finds this financial freedom a little bit at different points in the game. But I think that folks listening to this channel are a little bit, you know, make higher salaries. They're a little bit younger on the scale. Henrys, if you call them, I think the acronym stands for high income, not wealthy yet. But, you know, do what I did, you know, work in your 20s and make sure you save in that time to build assets, and then eventually you can quit by the time you're 40 years old. Well, thanks for listening. This is your rich uncle here. If you guys like this channel, please put a comment below. If you guys want to argue with me, let's argue. Put it into the comments below. I mean, I think there's a good amount of information that you guys hold out there. And if you guys have other topics that you guys like to discuss, put it into there too. And thanks for listening. Rich Uncle out. Bye.